So tell us a bit about Barlow Irvin Financial Services. How did it all start?
Well, I came into the mortgage industry 18 years ago. I'd worked in finance for a few years, various different types of finance, but not the mortgage industry. And I actually came into it through going to see somebody about a mortgage myself. Me and my wife went to meet a guy in Bolton at his office and literally sat with him for the best part of 2 hours, talking through everything. And she knew, my wife knew, I was looking for something different. And when we walked out of the room, she just turned around and said, "Why don't you do that? You seem to know as much as he knew. Why don't you have a look at it?" And I thought, that's interesting, maybe. So I went away, did a bit of research, passed the exams, decided to go with it. Found the normal route that most people do, so worked for one of the big national companies. Did that for 2 or 3 years, then decided I wanted to go out on my own and worked for quite a while, self-employed. The typical, what everybody knows is the back bedroom business, you know, spare bedroom at the back of the house. Did that for a few years and then sort of got to the stage where I thought I want to take this a little bit further. And that's where Barlow Irvin was born. So I had a good client of mine who had for a long time asked me could she work for me. She worked as a legal secretary and she'd admired me for 2 or 3 years saying, can I work for you? Can I not work for you? So eventually I decided that, yeah, I need some help. So Kath joined us 8 years ago now and she's still with us. She's my office manager. People say she runs the business, not me, but there you go. She's certainly the boss. And then we just went on from there, brought a couple more people on. Obviously, we've had people come and go over the time. We've now got a team of 6, which is 3 mortgage advisors, including me, 2 administrators and an insurance specialist. And it's great. I love it.
Oh, nice. I love that story.
Yeah.
How did you end up knowing as much about it? Was it just a passion that you knew a lot about it?
It was just a bit of research. So like I said, I worked in finance. For my sins, I worked in the tax office once upon a time. So I'd always been in and around finance and money and that sort of stuff. And it was just a case of I did a bit of research before I went to see this guy, and we sat down and we talked through it, and I threw a few ideas in and he threw a few ideas in and we came to the solution. And it was just a case of, like she walked out and she said, "You know enough about that, why don't you go and do it?" I think it was because when we came out of the office he had a nice car in the car park and she spotted that first. I think that was the idea. But yeah, so that's where it came from. And it's as much as it's about mortgages, it's a people job. It's about talking to people. One of my good friends used to say we get, our job is basically we get paid to go and sit on sofas and drink tea. Which is a pretty cool job, actually. That's pretty much what we do.
Yeah, sounds good. So you mentioned that you're a team of 6 now, and that's grown over time. What have you found to be the best channels for growing? I know that you just mentioned word of mouth as well. Is that your? Yeah,
it is. So most of the people that have joined us, we've had a couple of people come on board through normal sort of recruitment, but actually the team itself are quite close knit. So Kath, who, like I said, has been with me for 8 years now. Her sister works in the business, Claire. We got a girl I knew through the business, which is Jade, who's our insurance specialist. She came to work for us, and then we've recruited through sort of normal channels, a bit of advertising and agencies for the other guys that are with us. But yeah, it's very much the mortgage industry, probably like a lot of others, probably like where you work yourself, Lydia, is everybody sort of knows everybody. And you get word of mouth, people maybe looking for something new or whatever. And that's how we've done it. And like I said, we're a team of 6 at the moment. Hopefully we'll go a little bit bigger.
Yeah, hopefully. Where does the name Barlow Irvin come from?
Yeah, that's a question, because obviously it's nothing much. It's a bit of a random name. So I mentioned about looking to grow the business, and obviously looking at Kath coming on board and changing a few things around. And for a year or 2 before she came on board, I thought I want to formalise things, not just my name. And I was sat at my desk at home, scribbling ideas down. And Barlow Irvin was one of the ones that I wrote down, and wife was at home and I called her in and said, "What do you think?" She said, "Oh, I love it. Yeah, it's great." And basically it was the year before that happened, my dad passed away between Christmas and New Year. And 10 days after my dad died, my father-in-law died. They'd both been ill for a while. It wasn't a big shock. It was no big thing. So basically my dad and my father-in-law both died within 10 days of each other. And my dad's middle name was Irvin, and my father-in-law's middle name was Barlow, and it just seemed to flow.
Oh, I like that.
That's where it came
nice
from.
Story.
So that's where the name comes from. Of course, I'm Gary, so I set up the website and I set up the email address, and I didn't realise until about 3 months later that my email is Gary at Barlow. Irvin.co.uk. So I do get asked to speak to Gary Barlow occasionally.
I love that. There's lots of stories in the news at the moment about the rising cost of houses, and it seems like it's never ending, to be honest. So why in particular are house prices going up so much?
Really good question, and a really difficult one to answer. There's lots of different things that contribute to the housing market. I suppose basically the main one is just simply supply and demand. There are more people looking for houses than there are houses available. That's it, it's basic economics. With the housing market, there's lots of other things that you can throw into that as well, lots of other bits of equations. Obviously, interest rates at the moment, despite the recent rises, they're obviously very much in the news, they are still incredibly low. So it's still really, really cheap to borrow money. That makes a big difference. And then obviously on the back of that, we've got the pandemic and the follow-on from the pandemic, and the fact that people want to look at how they live, and people looking to move house because they want to work from home, they realise they don't need to be near work anymore, they can move out into the country, or different needs and things like that. So basically, everybody's looking at a change in lifestyle. Yeah. Which basically goes back to supply and demand.
Yeah, definitely. And it was actually in the news this week on Monday that the average house price in Great Britain's gone up to 350,000 for the first time ever, which is great news to hear as a young person trying to save for a house. And that had risen by 1.4% from February, which is the biggest jump month to month since 2004. And that goes down to what Rightmove have said is the supply and demand, that there's sort of twice as many buyers as there are sellers right now. So how's that sort of impacted your customers at Go2?
I'll start with the first thing really, the 350,000 figure. I always take with a pinch of salt. Obviously, we are a country of vast differences in house prices between the north and the south. You know, we're based in the north of England. Our average house price is nowhere near 350,000. That doesn't mean that things aren't going upwards here. Of course they are, and yes, it is starting to impact our buyers. We've not really seen any first-time buyers who maybe haven't bought what they would have done, but maybe people are starting to have to think a little bit more about what type of property they want. Maybe be a little bit more realistic with their expectations. Sometimes that's something that they need to do. The flip side to that is obviously anybody that's already a homeowner as well. Obviously first-time buyers like yourself, you've got the issues about whatever. Existing homeowners are obviously making money out of it, so that's good on their side. So it's a bit of a double-edged sword, as always. But we are sort of working a lot with our clients around obviously the smaller deposits are around these days and that sort of thing. So it's as difficult as it can be. We're still seeing that there's plenty of activity in the market. There's still plenty of first-time buyers asking to speak to us.
And you do have to question those figures sometimes, because I was thinking 350,000 in the north, like, it's probably more of a southern figure, to be honest.
It is,
but
I would say certainly first time buyer houses in our area, our core area, sort of around the Bolton, Manchester area, you may be talking 130, 150 maybe. You know, 350,000 up here will get you a nice detached property. Probably not your typical first time buyer house.
No, exactly. And so do you think that the rise in interest rates, 0.75%, is going to slow down the house prices rising?
In itself, maybe not, strangely. The rise in interest rates is basically there to try and cool inflation. The problem with inflation at the moment is it's probably driven more by fuel prices. Everybody knows the gas, electric, every time you try and fill your car up with petrol, it's costing you more money these days. So it will, the idea about putting the interest rates up will reduce the amount of money that people have got to spend, which should bring inflation back down. Obviously, it does feed into mortgage costs. Banks have been putting interest rates up on fixed rates and things for a few weeks now. They've been anticipating this coming. And some of the people that we're speaking to at the banks are saying they're expecting maybe interest rates to go to maybe 1.25% by the end of this year. So there is a little bit more to come. It's still, somebody of my age, it's still incredibly cheap.
I know,
I have a lot of customers who've never seen an interest rate rise in the entire time they've owned a property. So it is a new thing for a lot of people, but we are still in a really good spot with it. I think it will start to cool. You go back to the supply and demand, it can't carry on the way it has been. Things will start to slow down a little bit. Will there be a crash? No. My feeling, my honest opinion, I don't think there will. I think things will cool down. and things will become, a little bit more stable.
Yeah. It's interesting that you say that, because when I speak to like my parents, for example, they say historically, I don't know what it used to be, maybe like 15% or something like that.
15% is the worst, yeah.
Yeah.
If you speak to anybody of a certain age, they will tell you 15%.
Yeah. So it's good to at least hear that that's dropped dramatically since then.
Yeah.
So let's touch on remortgaging now.
Okay.
With everything increasing, a lot of borrowers don't realise that they can apply up to 6 months before the current deal ends and sort of lock those rates in. Is it worth remortgaging, and what sort of advice are you giving to your customers right now?
Yes, certainly an advantage in starting the process early. Yes, it's always worth looking at what you're doing, especially if you're on a fixed rate deal, for example, or some sort of deal with your lender that's coming up towards the end of that time. You certainly need to be having a look. We used to look at 3 or 4 months before the end of the deal to speak to our existing clients. We're now looking towards 6 for a couple of reasons. The main one really is that if rates are starting to trend up, as you say, you can lock yourself into one now.
Yeah.
As long as you've got your application in with the lender, they will honour that rate that you booked at that point. Mortgage offers typically will last up to 6 months. So as long as you pick the right lender and the right product, it's a good idea to get something in place nice and early.
Yeah. So you mentioned earlier about the sort of lifestyle changes that have happened since the start of the pandemic, with people wanting more room to work from home and things like that, people wanting bigger gardens so they can sit out on a lunch break and things like that as well. So how much of a difference have you noticed in the sort of properties that people are looking for since the start of the pandemic?
I think pretty much like you just hit the nail on the head. I think people have realised through the lockdown that maybe space is important. Location used to be, as location on the TV or whatever, used to be really important for a location. Be near work, be near the train station, whatever, because you had to go into the office every day of the week. Now that isn't the case, and people maybe never go in or only go in once or twice. Then they can look to maybe move out of the expensive areas, move somewhere a little bit, get more space, both inside and outside. Garden space is obviously at a premium at the moment. And we've certainly seen a lot of our clients looking to move into something with a little bit more space, and obviously take advantage of low interest rates, things like that. We've seen quite a few clients looking to upsize considerably, which was a little bit of a surprise at first for us, but it has definitely been a trend.
Yeah, definitely. I imagine that would be the case. So have you noticed a difference in demand since the end of the stamp duty last year?
Not particularly. I'll be honest with you, in my opinion, the stamp duty holiday was a mistake. I think a lot of people would probably agree that it created an artificial demand and certainly an artificial bottleneck with people trying to get purchases through in time. Caused quite a few problems in the market, especially with the legal side, with solicitors. There was an awful lot of panic and people getting really stressed out because they had to hit by this certain deadline. And I think the people that it needed to help the most, which is the first time buyers like yourself, Lydia, it didn't really impact. It was the next time up, and those sort of people, realistically, if you're selling a property, your stamp duty is probably built into your equity anyway. So it's not trying to find a few £1,000s extra on top of your deposit, it's taking a little bit out of your equity. It's not as big a deal. So surprisingly, there was a little bit of a lull afterwards because there was this bottleneck, and once that went, but actually since then, since September, as we talked about before, the market has just continued to thrive. So, in my opinion, the stamp duty holiday probably wasn't needed and created more problems than it needed to.
Right, okay, interesting. And lastly, there's also been a lot of talk at the moment about advice for young people like myself who are trying to get onto the property ladder. There was the story last week about stop buying Greggs, stop going out for your avocado on toast, stop buying your coffees every day, and how much that would save. But realistically, I think there's a fine line to tread between how much that would save long term and also enjoying your life as a young person as
absolutely.
well. So what constructive advice would you have for young people trying to buy the first property? Yeah,
this is a question we get asked a lot. How can we help to get the deposit in place? There's a few things, and as condescending as it might sound about the Greggs and the avocado on toast and not having your latte in the morning, there is a lot to be said about having a look at your spending. As a matter of course, we would normally sit down with a client with some bank statements and go through them anyway when we're looking at affordability for a mortgage. And I have literally lost count of the number of people where you can go through somebody's bank statement and there are items on the bank statement that they don't use anymore, gym memberships, clubs, subscriptions. And there are actually people out there, and an awful lot of people might recognise this, that stuff comes out of your bank statement that you don't even know what it is. 10 quid here, 5 quid there, and it does add up.
Yeah.
So as much as the don't go to Greggs for dinner may be a little bit on the far-fetched side, there is a lot to be said for that. Obviously, outgoings is one thing. If you can increase your income, that's another one. If you're really, really keen to get on the housing market, then maybe look at, a part-time job, a little bit of extra work somewhere along the line, maybe obviously overtime or whatever you can in your current job, or if you need to pick up something else. Things that you don't need around the house anymore. eBay's great.
Yeah.
Get yourself a few quid out of eBay, that sort of thing. But I think the one key piece of advice I would say is, if you are, like I say, really keen to save for a property, is what they call paying yourself first. What people will usually do when they're putting money into a savings account is wait till the end of the month, and whatever you've got left, move it across into a savings account.
That's what I'm doing.
That's what you do. What I would say is do it the other way around.
Okay.
So on payday, transfer the money into your savings account.
Right.
Obviously, you leave enough in to cover your essential bills and some extra, but set yourself a set amount, put it into your savings account. What you will then do, naturally, is adjust your spending accordingly. Yeah, as long as you're disciplined and you don't keep dipping into the savings, that way the priority which you've got, which is to save for your house, is taken care of at the start.
I'm going to start doing that.
That's a little tip. The other thing I would say is that, as well as that, there are a few schemes on the market that can help with first-time buyers. Quite a few knocking around. The most common one that everybody will know about is Help to Buy.
Oh, yeah, I got mine in though just before they stopped doing it.
Yeah, so Help to Buy obviously is coming to an end.
Yeah.
But at the moment, obviously, it's only available on new build properties, only available to first-time buyers, obviously. But there are some schemes around there very similar. Okay. There are actually a couple of private versions of Help to Buy, which have recently come to the market, lenders that will do that sort of thing. Now, these aren't right for everybody. They do need to be looked at, because there are positives and negatives, as with everything, and you need to be fully aware of what you're doing. But if you speak to a proper professional and have a look, it might just be the answer that you're looking for.
Right, interesting. We're going to have to have a look at that.
Yeah. Okay.
Right, thank you for sitting down with us, Gary. It's been very useful to have a chat.
Good. Pleasure.